AMD. Holy smokers, this ain't no jokers. Listen, AMD's up 41% in the past 3 months, and it's still a buy. It's still a buy. I know it's a big move. It's still a buy. The thing you got to understand, okay, is when you start learning anything about investing, about money, very early on you get brainwashed. And the reason you get brainwashed is they tell you buy index funds, you're going to make probably about 8% on average per year. So right off the bat, your mentality has this 8% number drilled into your head. And it's been like that since I started learning about finance and investing and business back when I first got into college in 2008, right? It's still like that to this day. Whenever you start learning about finance, money, they're going to say index fund, S&P 500, make about 8% per year. So that's what you think. So when you all of a sudden hear about a stock goes up 40% in 3 months, you think that's insane because you're like, that's what you would make in an index fund over 4, 5, 6 years. And that stock went up that much in 3 months. That's insane. Like, that's crazy. Like, what are we talking about here? Like, you got to sell it, right? The thing you got to understand about this, okay, when it comes to individual stocks, when you own a great company that increases their revenues dramatically over the years, their EPS dramatically over the years, their stocks usually run massively, massively. And what I show you here, this is the top 20 performing stocks in the S&P 500 over the past 5 years, 10 years, 15 years, and 20 years. What do you find? If you look at the past 5 years, we got countless stocks up hundreds of percent and some stocks up 1,000+%, right? Now we take that over 10 years, and what do you see? Every single stock is up more than 1,000%. And some stocks are up 2,000%, 5,000%, Nvidia up 32,000% in the past 10 years. Now we take it over 15 years. What do you find? The worst performing of the 20 stocks in the S&P 500, right, of the best performers, the worst one, number 20, is a company named Eli Lilly. That stock is still up 3,300% the past 15 years. And some stocks are up 10,000% plus. Look at this boring company, Texas Pacific Land Corporation, up 13,000%. Look at Tesla Model up almost 20,000%. Look at Nvidia up 67,000%, right? Then you can take it over 20 years and we go to a whole new level, right? Now the worst performer of that 20 is Domino's Pizza at a 4,200% gain. So what you realize is 40% is nothing. Nothing. Let me show you a stock that I bought many years ago and I sold it very shortly after, and I look at it now because I think I made like 40% on it very quickly, and so I sold out of the position completely, and I was like, dang, I just made a lot of money really quick, and I regret it immensely. Let me show you that stock. Here we go. What you're looking at is a company. I'm going to tell you the name of it in just a moment. But basically, I always wanted to buy this stock. Always wanted to buy this stock. I'd done some more research on it. I'd seen the stock flying and flying and flying for a while. It went on a great run. It was actually brought to me by somebody I taught the stock market to back when I worked at Quick Trip. And I didn't quite get it at that time, but as the years ticked on, I got to see what the company was doing. I was like, oh man, I want to get in this company at some point in time. I just didn't have the right time. But then the end of 2018 happened, and the stock market just went through a crazy end of year crash essentially. And we were on pace in that December to have the worst December since the Great Depression. It was unbelievable, really. And so all the tech stocks are getting obliterated, and this particular stock fell about 50%. And so I bought the stock. I bought it actually in the public account, if I remember, and I might have bought it in some of my private portfolios as well. Well, that 2018 situation ends, and market just kind of rips higher in early 2019, right? And a lot of these tech stocks come back. And next thing you know, I'm sitting on a huge gain on that stock. I think I made like 30 or 40% in quick, in a matter of months, right? So I'm like, dang, that was really good. I made a lot of money quick. And I said, man, I made so much money, you know what? Let me take my profit on this. And I sold out of the stock completely, right? And I kind of felt good shortly after because then the stock started going down again. I was like, oh, good move, Jeremy. You got out at the right time. Well, look at that stock. Stock is called Nvidia. This is where Jeremy sold out his big profit. Good job, Jeremy. You sold your big profit right there. And look at where the stock is now. When I say 40% is nothing in a great company, 40% is nothing in a great company. Like these companies, if they've got 5, 10, 15, 20 years of strong growth ahead of them, 40% is nothing. I tell you that. And I show you the data behind it. And you really start to realize, oh, dang, like it's not. But once again, when you're brainwashed about this 8% number, and that's ingrained in your head, oh, make 8% per year in an index fund, you think 40% is insane. You're like, oh my gosh, it's like all the money in the world. No, it's not. It's not, folks, okay? Now, here's the deal with AMD. So AMD, in my opinion, is the next up to join the $1 trillion boys club, I call it, okay? There's a $200-ish billion market cap as of right now, $137 stock. There's no doubt in my mind, seeing the AMD roadmap and where this company's headed over this next 5 years, that they're going to get to that $1 trillion boys club. It's just a question of, do they reach it in 2026, 2027, 2028, 2029? That's really the only question for me in regards to AMD at this point in time, okay? Now, for the company, MI350 is the first, and that just went into production here very recently. This is their first big product that is really putting them on the map AI-wise. Like the first series of MI300 series, like, okay, getting a little started, but the 350 is such a huge ramp up versus the 300 that this is the first time you're going to really start to see the numbers pouring in a major way. MI400s blow the top off. Okay, the MI400 numbers are going to be unreal for this company. And Lisa Su's been talking recently about like a 10x performance jump versus the MI300 series they were just showing off, last year or whatever, right? So, I mean, this is like a night and day difference, and the MI400 orders are going to be insane. I think AMD is going to be able to get big money for those chips, and they're still going to be able to undercut Nvidia's pricing. So that's a great thing, is they're going to get crazy money for the MI400s, in my opinion, and they're still going to be way under Nvidia's price. That we'll see if that plays out, but that's exactly what I expect to play out, seeing kind of AMD's strategy here. So it's like literally AMD is like in the perfect position because Nvidia's gone so insane with their pricing on their AI chips. AMD is going to be able to come in with their phenomenal chips and just undercut in a huge way. That doesn't mean NVIDIA is doomed or anything like that. So don't think like, oh, NVIDIA is a great short or something like that. Like NVIDIA is going to continue to put up very good numbers. It's just AMD is going to be able to grow immensely because AMD put these pricing so ridiculous that now AMD is going to come in with super great performance and be able to show you, here's what we can offer you, but it's going to seem cheap. It's going to seem cheap to all these big AI companies, the Metas and the Googles and, all these other companies, Microsoft, all these companies, it's going to seem cheap to them. They're like, oh my gosh, I can get this sort of performance for this price. Like, and AMD is going to be sitting there like, oh my gosh, like we're going to be making more money than we ever thought possible. And then after the MI400 series, we're going to have the 500 series, which will just build on the 400 series. You won't hear a lot about 500. You probably start hearing about 500 series. My guess is late. Probably second half next year, in my opinion, because right now we're all 350, and then everybody's going to be talking about 400 in 2026. So 500 maybe the end of the year or something like that, or maybe that's a 2027 thing. No, this is like video I showed my kids. I think it got suggested to me on Instagram or whatever. Right, Carlos Sainz, F1 driver, he's driving go-karts, and they start him in last place, and by the time the race is over, he's like in the front. That's AMD. Let's just call it what it is. NVIDIA got way out in front of AMD, but AMD is playing catch up in a very quick manner. And it's to the point where AMD is like, I would call it right under NVIDIA now at this point in time. I still would say NVIDIA's in first place, but AMD is not that far behind now at this point in time. Whereas if we were to go back like, 2 years ago, it was like AMD was so far off the map, you couldn't even see them. Then if we go back like a year ago, it was kind of like right here. Now at this point in time, I would put it kind of like here, like NVIDIA's here, AMD's here. And so, I'm not expecting AMD to pass NVIDIA because they don't actually need to. But I just expect them to stay very, very close, and that's going to mean phenomenal things for AMD's business model here, right? Now, AMD, I spoke about this one very in depth. I think this was an exclusive AMD video here, 35-minute long video about AMD. If you want more AMD talk, check out that video from a couple weeks ago, biggest development in 10 years. I put that on the thumbnail there. You'll definitely want to check that one out. Now, here's the deal. This is my position in the public count. We're up $67,000 in the stock now at this point in time. It's a $350,000 position. I also own a bunch of AMD shares in my other portfolios as well. I'm not selling anytime soon. Like, I would not be shocked. There's a $137 stock right now. I would not be shocked at all if this stock's 200 plus this year. Not 10 years from now, not 5 years from now, not 7 years. I'm talking this year. I would not be surprised at all if this stock goes 200 plus. I think the guidance next quarter, which that quarter's going to be out probably in the next 30 days. For sure, in the next 30 trading days, in my opinion, that next quarter will be out. I think their guidance is going to knock people's socks off. I think it is. I don't think people are prepared for what that guidance number is going to be. And when people get wind of what that guidance is, and then they hear the conference call and Lisa Sue's confidence, I think there's going to be a mob to get an AMD stock. And it kind of already is. And then I think 2027, the stock, worst case scenario, is probably 300 plus. But this stock could be a $500 plus stock by 2027. Like if this 350 sells away, I think it's going to sell. And then that 400 goes insane. Like I think it's going to go insane. And the price they're going to be able to get on that 400 series, just wait to see the price they're going to be able to get on that 400 series. We could be talking about a $500 stock in 2027 and 2028, right? So keep that in mind. I really like AMD.
Hey, it's Jeremy. I hope you really enjoyed that clip here today. What you're looking at in front of you right there, that's 1000xstocks.com. That is my personal advanced software that I use to make my investment decisions when I go to invest in companies. As somebody that's been in the market 15 years, I got sick and tired of using these different services that folks have out there that are designed for traders in the market. People that are looking to get in and out of stocks. That's not what I'm here to do. I'm here to long-term invest. I need to be able to see all the different ratios and metrics that are very important for me as a long-term investor to judge if I'm getting a great deal on a stock or if I'm getting ripped off on a stock. I need to be able to compare different companies versus each other and be able to do that in a matter of seconds rather than it taking hours like it used to before I created this service. I want the ability to listen to conference calls, see SEC filings all in one service. That is what we've created with 1000xstocks.com. If you are looking to access this software, go down to the description area of this video. You can click the link down there and apply for access. If you don't want to do that and you want to search a website, go to 1000xstocks.com. Enjoy it.
Here's where I want to start. Very important we start right here. So, what am I showing you? I am showing you a 1-year chart of the VIX, the S&P 500, the Qs, and which Qs, just think about it as the NASDAQ, in the IWM, okay? Now, what's interesting about looking at a 1-year chart and kind of really zooming out of this market, because I understand this year has been crazy, right? 2025, it was straight risk on, into straight risk off, into straight risk on. Like this year has been insane. But when you look at it over a 1-year chart and you zoom out a little bit, you begin to look and you say, everything's going exactly as expected here. Like this is what you would expect over a 1-year basis. So right off the bat, the VIX is up huge over the past year, 35. It's up 35%, right? That doesn't surprise me at all. What did I tell you guys was going to happen? T-Man getting in office, like the VIX is going to spike huge, right? You know, Biden, you didn't hear a lot, right? Trump, it's every day. Trump's doing this. Trump's all of a sudden tariffs, blah, blah, blah. Besant said what? Who said what? What? Every day. Drama, right? And so the fact that the VIX has exploded this year doesn't come as a surprise at all to me. That's to be expected, right? Additionally, you look at the S&P 500 up 11%, the Q's up 11%, the IWM up 9%. That's about to be expected. Like that's usually roughly how the stock market performs in recent decades. So none of this really comes as a surprise. Where things start to get really interesting is you look a little deeper here, okay? And this is just year to date. So this is 2025. Now, when you look at this, what's interesting is not the Qs and the S&P 500. Qs up 8%, S&P 500 up 6%. Not a surprise at all. With the big, beautiful bill going through, right? A lot of that should benefit some of those big tech companies. Plus good earnings those companies have reported. That doesn't surprise me at all. The Qs being up 8% this year so far, and the S&P 500 being up 6%. What is surprising is how poorly the Russell 2000 has performed, IWM, so far this year. It's way underperformed. I mean, way underperformed the other indexes. The Russell's basically flat on the year. Flat. It hasn't gone anywhere. You know, it's gone up and gone down, but it's at the end of the day, it's just flat on the year, right? Versus S&P 500 up 6%, the Q's up 8%. That's massive underperformance. But this is where things begin to get interesting. If you look since the April bottom, we've started to have a switch in regards to Russell. since that April bottom, right, where the VIX has gone down 55% since then, the S&P 500 is up 18%. The Russell has outperformed the S&P 500 since that April bottom. The IWM is actually up over 20%. It is still getting outperformed by the Qs, which are up 24% since that time, but there's clearly a lot of strength in the IWM more recently, as in the past, we can call it 3 months or so, right? Now, additionally, to take this a step further, look at since the last CPI report. The last CPI report came out around, it was like June 11th, June 12th, okay? Now, what have we seen since then? Well, the IWM is the best performer of the major indexes since that last CPI came out. The IWM is up 4.4%. The Qs are up 3.8%. The SP 500 up 3.3%. So holy smokes, this ain't no joke. This IWM's actually outperforming very, very recently, right? And, obviously in that last CPI, what did we find out? We found out inflation has normalized, right? Which is definitely bullish for the IWM because people look at that as, those small caps get hit the hardest by inflation. They also say Fed has to leave rates higher. They say the small caps are more rate sensitive. That is at least a view. It's not always true, by the way. Sometimes it's not true, but the moral of the story is that's what the market believes. So if the market believes things are getting better, then the Russell performs better, and that's what we're seeing here recently, right? So it's as clear as the sky behind my house here, okay? Very, very clear that the Russell has come back, right? There's a clear trend that the move is toward the Russell 2000. It's towards small caps because you look at that on a one-year basis and you say, oh boy, things are rough for the Russell. And then you look more recent over the past few months and specifically since the last CPI, and it's like, it's clear as day. The Russell 2000 is the move. Small caps are the move now at this point in time. Now, what does that mean? That means we're now at a stage where we're getting into an everything bull market. The thing you got to understand about the bull market kind of in recent years, since that 2022 bottom, right, in the fourth quarter of 2022, is what have people hated on the market for? They say, okay, big deal. Nvidia and the top tech stocks are all the ones carrying the market, but you're not getting any breadth in the market. You're not getting consumer staples doing well. You're not getting consumer discretionary doing well. You're not getting small caps to do well. You're not getting travels. That's been the whole point that people have made to kind of discredit this market, at least in 2023, 2024. Well, now that all of a sudden the Russell's starting to move as well, now it's beginning to get, you got stocks like Nike moving, you have stocks like Wynn Resorts moving, right? Now you're starting to say, okay, we're starting to move into an everything bull market. It's not just Nvidia going up anymore at this point in time. It's not just Meta going up. It's not just Palantir going up. Now it's like everything is starting to go up. Everything is starting to move, which actually gives a lot of fund managers comfort in the market because fund managers haven't felt that comfortable the last couple of years with just the market being carried by the top of the market. They want to see the whole market doing well. And the more the whole market does well, the more they feel like they can invest into the market and invest aggressively, right? So we're now in a stage where we're seeing an everything bull market. Now the question is, how long does an everything bull market last, right? Where it just seems like just about everything's going up. Small caps, mid caps, large caps, and let's call it super caps as well. Well, I've been in the market a long time now, I think maybe 17 years, right? It got started 08, 09. I have seen several bull markets, let's call it everything bull markets. I've seen some of them last several months. I've seen some of them last several years. They don't last weeks or days. They last usually many months, or sometimes in some cases, I've witnessed it before, where it's lasted years, folks. And this is just since I've been investing. I'm not even taking you back to prior to 08, right? Because there's plenty of periods I can show you there as well. But this gives you a good example of, coming out of that 09 bottom, right? In the next 5 years, what did we see? We saw an everything bull market for 5 years. 5 years of an everything bull market. The IWM over that time was up 200+%. The NASDAQ over that time was up 214%. So the IWM actually outperformed the other indexes. And the S&P 500 was up 172%. 172%. So the important thing to understand about an everything bull market is the Russell actually can outperform the S&P 500 significantly. And it can also outperform the NASDAQ. So moving into a everything market, just understand, IWM comes to life and does very, very well. And I understand everybody's hated the IWM for the last 3 to 3.5 years. The IWM has like not been the play, but just understand that you're going into an everything bull market. IWM will be by far the play. It won't just be that it outperforms, it'll be that it outperforms other stock market index significantly, right? Now, along that 5-year, we can call it everything bull market, you had several breaks in there. Let's not act like every, quarter was up, every single month was up. You had, a million different kind of small falls along that 5-year period, but you had 4 major breaks in the market. Right here in 2010, you had a major break in the market. Right here in 2011, you had a major break in that bull trend. Right here in 2012, you had a break in the bull trend. And right here in 2013, early 2013, late 2012, you had a break in the bull trend, right? And you had plenty of pullbacks along the way, but those were kind of 4 major breaks in the market. But at the end of the day, it was an everything bull market for 5 years. You could even take that everything bull market into part of 2015, and then you kind of had a major downfall there for a bit, right? So just understand, everything bull markets can last a while. Everybody thinks it's just gets over fast. No. You could be, doesn't guarantee it, but you could be looking at several years of an everything bull market, right? Now, also, you've got to think about the president. You've got to think about where the economy's headed and how that can factor in with the stock market, right? Now, first thing important to understand, the stock market is not the economy is not the stock market. There can be periods when the economy actually is doing very well and the stock market is not doing very well. There could be time periods when, the stock market is performing great, but you look at the economy and you're like, dang, that's not like that booming, right? And you could even look at the last couple of years. A lot of people feel like the economy hasn't been booming, but the stock market's been booming, right? And I could take you back to past periods, like the tech bubble popping, and that being the very next 3 years of weakness in the stock market, but it wasn't like the economy was doomed over that time or something like that, right? Now, the important thing to understand here is when a president takes over, people assume the first year is like that president's economy. Listen. The first year is the previous president's economy. So the economy you're seeing this year, I would say this is, Biden's economy still at this point in time. For better or for worse, it's Biden's economy. The same thing in 2021 when, Biden took over for Trump. That was still Trump's economy in 2021, okay? So the thing you got to understand here is the Trump economy really starts in 2026, okay? So, if you're bullish on the Trump economy, things should be very, very good. The economy should strengthen considerably in 2026. If you're bearish on the Trump economy and you think it's going to be worse than the Biden economy, then you should expect, the economy to go really bad next year. But it takes a while for everybody to get their policies enacted, right? To get tax bills changed and all that stuff. And you're seeing all the things be set up right now for the Trump economy, right? And that's everything he's been put in place this year, but you really start to feel the effects of that, negative or positive, next year in 2026, essentially, right? So that's an important thing you got to always kind of keep in mind. Now, Trump is supposed to be very pro-growth, right? And we're going to find out, if his policies and the way he's running the show is going to be pro-growth. We'll find that out beginning in 2026, right? That's a beautiful thing. We always end up finding out at the end of the day. So in 2026, 2027, 2028, we'll know. 2029, we'll know. As those years tick on, is the Trump economy a strong growth economy where we're going to see GDP expand rapidly to the strongest numbers we've seen in a long time? Or is it not going to be a strong economy? It's going to be a weak, put out the candles economy. I don't know. We're going to see. But if you're bullish on the Trump economy, just understand it's coming. It's not here right now, but it's coming, baby. Now, additionally, when you look at the market, here's where sentiment starts to matter significantly, okay? We've had a shocking 23 straight weeks where the investor sentiment has been above average bearish. 23 Michael Jordan straight weeks, folks. That's one of the longest, that might be the longest streak we've ever had in the history of the AAI investor sentiment. You can do the study on this if you want. Go to AAI.com. Go ahead, pull up the historical documents on this one, and let me know. I believe this is the longest streak we've ever seen in the history of that survey, which dates back to the 1980s. 80s! That's when I was born. 80s, baby. It's a time to be alive and back in the 80s. Listen, that's insane. 23 straight weeks. But we're getting close to flipping. You keep in mind, usually you have about 31% of investors are bearish on the market over the next 6 months. And it's been 23 plus weeks since we've had that, but it's getting close. It's getting close to flipping. What happens when you finally get to a point where you got more people that are saying, you know what, let's just put it this way. You have a situation where the amount of bearishness goes under the average, right? It seems like we're headed that way, and that's going to be an interesting moment for the market. Now, my guess is for the remainder of 2025. Here's where I see happening with the market. The stocks I think will roll, and then we'll get into Tom Lee here in just a moment, okay? My opinion is Russell rolls throughout the remainder of the year, right? We're already seeing the trend toward the Russell. Like, at the end of the day, it looks like the Fed's going to start their next cut cycle in September, right? If you start to have more confidence around the economy and you're getting a cut cycle, and let's say we can start to get that 10-year lower and lower, and maybe by the end of the year, we got a 10-year that's in the threes, which is possible. You know, right now the 10-year is around 4.3 or so. So is it impossible to see the 10-year? You know, if you continue to have less and less inflation worries and you have the Fed start their next cut cycle, like I think it's very possible, and you don't see any of the tariffs like adding to inflation in any meaningful way. I think it's very possible to see the 10-year in the threes. 10-year goes into threes this year, along with the cut cycle, along with some level of confidence around the economy and maybe a stronger economy in 2026, the Russell's going to roll through the end of this year. Additionally, I think some big tech stocks will still do very well. Stocks like Meta, I wouldn't be surprised if Meta sees $900 this year. AMD, I wouldn't be surprised if AMD sees $200 this year. Amazon, I wouldn't be surprised if Amazon sees $250 to $275 this year. Google McDougal, I wouldn't be surprised at all if that one comes back very strong through the remainder of the year. So yeah, I think those sorts of stocks will do very well as well, on top of obviously small caps. Now, there's possibility of fall-time drama, but it remains to be seen in regards to that. This year has reminded me a lot of 2018. I've seen so many similarities this year between what I witnessed in 2018 and took place in 2018 and, what I've been seeing this year. But the thing is, I've got to see like how this puzzle comes together. And I can't clearly see it. Like I can't clearly see what's going to happen in the fall time to get us to have drama show as of right now. Now, maybe in 2 months, that's going to become more clear to me and I'll be able to put the puzzle pieces together and I'm going to be like, yeah, we're going to have a dramatic fall time. But, right now it's still too early for me to see how these puzzle pieces fit together. And maybe the puzzle pieces never fit together. Just because this year has reminded me a lot of 2018 doesn't mean it's going to be the exact same show as 2018. If we do get a situation where we do have drama in the fall time and the market falls considerably, then it will be literally an exact replica of 2018 essentially. Because if you look at how this year has played out, it's almost down to a T perfect lining up to 2018. The one last show here would be, we've already moved to all-time highs. We got to continue to blow through all-time highs, throughout the remainder of July and then into August. And then something has to happen come September that sends us down, right? And then in October, things start to get shakier, kind of market tops, let's call it September. And then we get a drama show October, November, December. But I don't know, man. Like we're going to see in regards to that. That's still a possibility. But these other two are, I would say, much higher probability.